Local bourse expected to edge lower today, taking a breather after the all-share index gained just over 2% over the past 5 days, boosted mainly by a rebound in mining shares. Roy Mutooni, an analyst at ABSA Asset Management, joins us now to talk us through the latest market news. Roy, very good morning to you. So take us through how the markets have opened in early trade. What's the sentiment that is influencing trade this hour?
So it looks mostly red. So the top 40 is down about 50 basis points. And what you're seeing at the top is a recovery in Sasol, some of the banks, and a lot of the mid-caps. So exactly like you said, it doesn't look like the momentum was maintained from yesterday. So a little bit negative at the start.
Let's pick up then on the precious metals outlook, and in particular the mining index, which surged in the past 5 sessions, tracking a recovery in platinum group metals prices. What are the latest developments, Roy, on the commodities side?
So it's been a very interesting move. As you well know, commodity prices have been incredibly volatile over history. I think basically what happened, what first drove them down was a fear that China was slowing down quite aggressively. And secondly, that chip shortage, which meant that demand for PGM metals over the medium term was probably going to be low, and we would probably have a surplus, which meant prices could come down. I think the realization in the past 1 week is that, first of all, Chinese exports are growing. Chinese demand for coal and commodities remains strong. And they've even started importing from Australia, which they had blacklisted before. And then also the chip shortage doesn't look as bad. I mean, there's a report that came out of Malaysia that said it was probably a little bit exaggerated. So I think what the market is recalibrating here is the fact that in all likelihood, you still have a bit of a deficit going into next year. So the stocks aren't particularly expensive even at current level. I mean, just remember, the whole commodity complex is up about 50% in the last 1 year. So well ahead of where it was before the COVID pandemic. It's come up a little bit, but it has really done well.
Let's talk about this particular investment, Roy. It's quite an interesting one. The Dubai ports giant, DP World, and Britain's Development Finance Agency, it's called the CDC for short. They've pledged to join or jointly invest up to $1.7 billion in logistics infrastructure here in Africa. Take us through the specs of this investment deal.
So this is quite a significant deal, and I think you'll hear people talking about it more and more from here. So the two of them have agreed to jointly invest about $1.72 billion in logistics infrastructure, and where that's going to start is in 3 ports currently owned by DP World, in Egypt, Senegal, and in Somaliland. I think you'll also remember that DP World made this investment in Imperial Group, Imperial Logistics, listed on the JSE, and there's a delisting that is on the way there, just showing how serious they are about infrastructure in the African continent. I think this is very positive. Remember, when you look at the various blocks in Africa, intra-Africa trade is actually quite low relative to other blocks globally. So if you improve your infrastructure, particularly port infrastructure, what you're doing is you're encouraging trade, and in particular, you're opening up inland areas which produce a lot of these goods, but where cost of transport is way too high. So this is positive, particularly in those areas where they're starting off, but you can well imagine that they're going to grow into other areas.
Yeah.
Maybe on the negative side, you might see a bit of a threat to already developed ports, but I think in the case of Africa, the more the merrier.
Yeah, talking about the positive investment mood when it comes to Africa, the Pacific Investment Management, one of the world's largest global investment management firms, has extended a $3 billion, or should I say 3 billion rand loan, I beg your pardon there, to the Development Bank of Southern Africa. Now, it looks like Africa is indeed truly open for business. What is this funding for, Roy, and what does the loan agreement entail?
So effectively what they're doing, what PIMCO is doing here is It's advancing funds to the DVSA to support its renewable energy program. So DVSA has been quite prominent in funding renewable energy in Southern Africa, well, broadly in Africa. So what PINCO is doing is just giving them a little bit more firepower. So what it does is it refinances current agreements that DVSA has in renewable energy and gives them the ability to start up new projects. So this is part of that whole UN program to develop about 10,000 megawatts of renewable energy in Southern Africa. And I think it's perfectly timed ahead of the COP26 conference, which will be held later on this year. I think it's next month.
Yeah.
Where I think everyone's going to be talking about sustainability, renewable energy, and the march away from coal and dirty energy.
Sure. Very interesting indeed. Roy Mutooni, thank you very much for that markets update. He's with ABSA Asset Management, an analyst there.